What is going on, out funders? Hopefully you are having a, let's see, marvelous Monday. It is a pretty marvelous day on the markets. We had a nice little gap up. We're not too indifferent currently on the SPY from where we opened. We did gap up, what was it, like 0.3%? Yeah, a little bit over 3%, 0.3%. About a third of a percent of gap up here. And there you kind of go. I mean, that's kind of it. It's kind of been a sideways day. Not really too much kind of going on. I'm going to go quickly through kind of how the markets look because I want to spend some time on where in the heck and why the markets were so bullish over the past year, and where I think probably you want to be looking for next opportunities. The Q's nice gap up here. Pretty solid gap up, actually. About a 0.5% of a gap up. A little bit more of a pullback, currently down from the open. But nothing crazy. Still up about 0.25% currently. IWM, though, crushed it today. Currently up 1.5%. About a 0.85% gap up there. Nice push in the first hour. And then it was kind of flat after that. Nice little quick pullback there for 20 minutes, 30 minutes. Sideways, though, after that. So that's kind of looking at the IWM. DIA, nice gap up here as well. Not looking too indifferent from the rest of the markets. RSP up currently about 0.5%. Not quite, but yeah, looking pretty good there. RSP, throw a nice little upper wick there. Kind of mentioned this head and shoulders pattern. Kind of retested into that on Friday. Pushed a little bit higher today, forming a little bit of an upper wick. Honestly, it's kind of hard to say that we're just going to roll over, especially with the SP 500 hitting all-time highs. But it is crazy how concentrated the market is right now. So, yeah, I don't know. It's kind of hard to tell on the RSP there. DIA, nice pump here over the past couple of days, throwing a nice little upper wick today. All-time highs still again today, looking pretty good. IWM definitely not at all-time highs. There's some, people talking about how much deviation or underperformance the IWM has had from the all-time highs it had, and I mean we're still down roughly about 20% from. Currently about 19.5% because we've done pretty well today. But we've never seen that before in market history. So we've never seen that before, where the SP 500 is hitting an all-time high and the IWM is down 20%. So maybe some opportunities out there in the IWM Russell 2000 world. So Qs, nice continuation higher. Seeing a little bit of some selling on the gap up today. Nice couple days, strong action. Looks pretty good. Nice volume coming in late last week. So yeah, not looking too bad. SPY also looking pretty good there. All-time highs. Had that breakout on Friday. Nice little bit of a gap up. A little bit of a doji coming in today. Okay. Not too bad. And take a look at the S&P 500 here over the past couple of years. You can definitely see that we are just above that previous all-time high from back in the beginning parts of 2022. So, yeah, I mean, we'll just keep rolling, and then I'll go into kind of some other things. VIX, a little bit of a gap up here. Usually, it's pretty reliable. Get that gap up there on Monday. VIX, a little bit of one, not all that big, not nearly as big as what we had last Tuesday. Last Tuesday we had a monster gap up there on the VIX. DXY, the US dollar index, still kind of consolidating. It looks a little bit like a flag pattern here, kind of setting in. Hasn't broken that 50 EMA, so it definitely might consolidate here. And then as these moving averages come up, might just continue to push higher. GLD, nice little sideways chop today. A little bit of a lower day. I mean, the DXY is flat. DXY is flat. Gold down a little bit. I mean, not a big deal. Not a big move kind of going on there. 10-year yields. I looked at this morning, and we were kind of at the lower end, I guess, of this wick. So I imagine we're probably bouncing off the lows. Yeah, I looked at it about in this area, I guess, this morning. Looking pretty good there on the 10-year yield. Nice bouncing off the lows there. You definitely notice that double bottom there intraday. So it's getting close to that 10 EMA, and that was kind of where, if we are going to have a pullback from that Friday upper wick, maybe we do pull back in that 10 EMA, those moving averages. Also got that previous little high that we had back in January 5th, January 8th kind of area. So, yeah, I mean, it looks pretty good right now. Maybe we'll continue higher later this week. 10-2 inversion, pulling back a little bit more today. Yeah, nothing crazy going on there. Nothing too unexpected. HYG, a little bit of an upper wick today. Okay. All right. I guess that kind of makes sense. Still just kind of in this consolidation range. Going to be curious to see if we do actually form a pin and pattern here, because right now it's kind of looking that way. So we'll see here over the next couple of days. LQD. Do we have a flag pattern? Kind of had a higher open. It's pulled back ever since. TLT also had a higher open. It's pulled back since. So, okay. Kind of mentioned that actually late last week on Friday about the TLT. Like it's a little bit extended away from the moving averages. You could probably see a little bit of a pop here. Possibly that was today's open. So might have done that all in one open, which is kind of a bummer. I mean, you weren't really even able to trade that. So utilities, staples, discretionaries, all underperforming. Materials also underperforming just barely. Energy is kind of in line with the market there. Financials, real estate, communications kind of all just barely outperforming, as well as healthcare. Tech and industrials, the best outperformers on the day. Intraday price action, you got energies, materials, healthcare all outperforming pretty good. Industrials barely outperforming there. Staples, real estate, financials, tech underperforming there after the gap up, right? After the gap up, you can see it definitely was underperforming early on. Communications, discretionaries, and utilities lagging behind there. Okay, so let's talk about some things. Definitely some things that got brought to my attention late last week. You know what might not be bad is starting with looking at sector rotation over the past, since the beginning of 2023. And this is, sector rotation. Let me bring up the VOO real quick. So, this is definitely sector rotation on the S&P 500. VOO is an ETF that tracks meant to mimic the S&P 500. But you can see tech, huge outperformance. Communications, huge outperformance. Discretionaries did have a big outperformance going into the end of the year, but you can see the beginning of this year has not been that, especially here over the past couple trading days. You can see XLK, XLC, tech, and communications really outperforming, and XLY discretionary is not outperforming. And then those were the only three sectors that outperformed over the past year, going back to the beginning of 2023. Industrials, financials, materials, real estate. I mean, everything else is underperformed, but utilities underperformed the most. Energy's been lagging behind here, especially in that Q4 when the market was bullish. Energies was not doing it. You can kind of see is kind of in line with the market there mid-October, and then it just kind of dropped off there pretty good. Financials actually did pretty well. Healthcare, real estate. So all that being said, kind of the area that, I had a lot of people late last week kind of bring up, not a lot of people, but I had some people bring up this China chart, right? And I kind of briefly talked about it last week. And let me get off of that. And since we bottomed, right? I mean, here at the end of October, this is also when the S&P 500 bottomed. So if I can add in the SPY here, Oh, I'll just add in the SPX. There you go. So there's the S&P 500. Now, what's very interesting is we did see this is China's rapid rise at the end of 2022, right? I think we all knew what was going on. There was a lot of stimulus from China that thought, that was going to end the issues that China was actually having even before then. Before we've had over the previous year, I mean, China was really getting hit pretty hard there, and then that is where it ends, right? We had basically about 3 months of bullishness there on China stocks, China market, and then it just stopped and immediately pivoted. And it is one that you can definitely see here, at least on this chart, these 2 days here. This is basically an island reversal right here, because these 2 days are just, you got a gap up, 2 days hang out, and then a gap down, and so we did just have a year of drawdown from that high, not quite a year, but we're coming up on that date, and you can kind of see what's kind of going on with the S&P 500, right? The S&P 500 has remained bullish during that time. Kind of caught a lot of people off guard. I'm imagining a lot of bears caught them off guard. So what really kind of one of the things that I think happened is, while people were pulling equity capital out of China markets, I actually think they were just going to safe havens, which was U.S. markets, especially big tech in the U.S., which, Alphabet, Amazon, Microsoft, Apple, all that kind of stuff. So that's where I didn't foresee. I wouldn't have foreseen this. I mean, you don't really know how capital flows are gonna take place. The one thing that really that we haven't really seen, that a lot of the bulls, especially last year, that they kind of talked about, the economy's gonna be fine, we'll get back to margin expansion, all that. I mean, we haven't really seen that. We haven't seen companies get back to margin expansion, and I still think we're kind of like in a margin contraction type of marketplace. And I mean, even Alphabet over the past week or two has even talked about more layoffs to come later this year. And one of the few reasons why you're going to look to do that is if you need to keep your margins high. You want to keep your margins higher. So this is one of the reasons why I think the market actually performed much better last year, and it continues to actually perform very well at the beginning of this year, outside of that first week, than what a lot of people thought, including myself. Now, will we eventually roll over on the SP 500? I think we will. Yes, I do think so. But is it going to happen this week or next week? Great question. The only thing that you know with capital flow is it's happening. You can't call it. You can't call it when it ends. Like you don't have that preconceived notion of, okay, this is when it's going to end. You just say, okay, we break this level. I don't. I mean, obviously, clearly the reversal is happening, and I don't want to be exposed to it anymore. So this is one of the few things that I would say has helped really the market drive higher. And you can see really just how much we dropped off here on the China stock market here recently, and how much we've pushed higher on the U.S. equities over the previous 2 weeks. I mean, we had a very sharp rise in equities over the previous 2 weeks, and it kind of coincides with, well, China market's dropping off. And if you know anything about China stocks, one of the things I saw was BABA actually is like hugely discounted right now. It's down. I mean, BABA, and I'm sure there's a lot of other Chinese stocks out there that are that have great valuations as well. But this is the one that I heard some people talking about, that basically this thing is cheap on a forward growth basis, and it is cheap on a trailing basis. So basically, any metric that you want to look at for Baba, it is cheap. So that and that just kind of goes to tell the current place in the market that we're in right now. People are staying away from China, and they are going with safe havens and what they know, and that's big tech US. Now, that would not be what I would start to do now. I think big tech US, especially probably starting to go into earnings season. I'm not saying go bearish on any big tech US companies because that's where capital flow is going. But I think right now the opportunities are going to start to be in those Chinese tech companies, Baba, maybe Baidu. Baidu's probably also in that same boat. Maybe it's not listed anymore. It didn't used to be that hard to find. So, anyways, Tencent, I don't know. It might still be out there. It might not be. But there's definitely other ones out there. If you want to look up Chinese stocks, those are probably really good deals right now. And remember, one of the top rules of trading and investing anywhere, whenever other people are fearful, that's when you should be greedy. People are very fearful on Chinese stocks, and it's been very prevalent here over the past couple of months. You can just see how much Baba and some of these are just really dropping off. So that might be some areas where I would look to go, and I would probably stay away just from huge exposure into the big tech, US big tech names. That's just the way I look at it, because yeah, those are areas where I wouldn't really want to be exposed to. And just looking here at the Europe markets. It definitely had a pretty good run at the end of last year as well. It's basically kind of up in that area of all-time highs. It looks like a false breakout here recently, where you got above the two highs that it put in back in 2023. It's also this lower end of this consolidation all-time high area. But you got this little head and shoulders. You got a shoulder, head, shoulder, and it's kind of retesting to that neckline right now. So it is a situation that people are going to go to safe havens if they feel like they need to. And China, with being one of the largest markets, largest economies in the world, second largest economy in the world. I don't know if their stock market's the second or third largest in the world, but it's up there. And so that's a lot of capital flows to be coming out over the past year. And where was it going? Most likely big tech US. And that's just kind of where I would be looking to probably go elsewhere now. I would be looking not to be bearish on big tech US, because you never know. How far the runway is, but I would look to probably be a little bit more exposed to those China companies that are that they've been hit so hard, massively discounted on basically any valuation metric. Baba, not a bad way to go. Baidu, not a bad way to go. Those are huge, big time companies. And yeah, that's kind of the one where I see it right now.